There is no way, I'm telling you there's no way, I'm sorry. Good morning and welcome to Business Income It's Made Easy, Part 6. We're going to talk about probably the most difficult paragraph that's in the business income form, and that's the actual insuring agreement. This is where everything happens. This is the criteria that is set forth in a total of, I think, 4 sentences that's going to tell you under what circumstances they're going to pay for this form. And whenever we have a loss, we always go back to these 4 statements in that policy. So the first sentence, and we're going to dissect this, so we take each one separately. It says, we will pay for the actual loss of business income. Now, actual loss, again, refers back to what we talked about in the very first session, that being this is an actual loss sustained policy. So we're going to pay for the actual loss of business income you sustain due to the necessary, okay, now, word necessary. It's going to be necessary suspension. That necessary has to be determined by the insurance company, not really by the insured. And so the insured has to do everything possible to limit their suspension, to avoid a suspension. And so it really has to be determined that that suspension was necessary. And suspension is defined. Of your operations, again, a defined term, during the period of restoration, the last of those defined terms. And we're going to look at all these defined terms in one of our sessions where we just look at the end of the policy for definitions. So what's important here is the word necessary, the word suspension, and the word period of restoration. So it goes on to say that the suspension must be caused by a direct physical loss to the premises described. So I have to have a direct physical loss. Now, what does that mean? Let's say I'm a restaurant and next door there's a fire. And because of the fire next door, I have less customers because, there's construction going on, so forth and so on. I didn't have a direct damage to my premises. And so I don't have the luxury of having any business income insurance for that. So it has to be a direct damage and it has to occur at my particular premises. It goes on to say, by a cause of loss indicated in this form. Now, what will happen is we're going to write the business income coverage form. And then that will be indicated on the declaration in terms of what the coverages are, to which we will add a cause of loss form. That's going to be a separate number, a separate name of a form. It is that cause of loss form that's going to tell us what situations we have covered. So fire you can bank on. We've got fire insurance. So if there's a fire, and as a result of that, I'm suffering a loss of business income, that's one thing. But what if it was a flood? What if it was an earthquake? What if it was a declared war? I would have no coverage then because that's not within the definition of the cause of loss. So in order for this form to pay, I have to have an actual loss because of direct damage to the premises by a peril insured against. As a result of that, I now have a suspension, which is a necessary suspension of my operations. And because of that necessary suspension, I can prove I'm losing income, or I've lost my lease, or I have extra expense. So that's the way the test has got to go. So I'm thinking that might not have been quite as easy as the other ones. I promise that the next one will be, because we're going to be talking about definitions. See you then.
That was easy.